Bitcoin is up 2,000% measured in sovereign bond terms. 2,000%. I mean, and that's because sovereign bonds are down 60% and Bitcoin's up, 10x. So it's just, this is a sovereign debt crisis. We can all see it. It's blatantly obvious. Will there be zigzags? Sure. And as you point out, there will be times when they do things that make us think we're wrong. And it's not going to be a one-way straight line to, Bitcoin at $2 million. But it's going to trend in that direction very, very heavily.
Just buy Bitcoin and shut the fuck up.
There we go.
That's the only thing you need to do. You don't need to get fancy with it. Just buy and hold. That's what I've been doing.
Lawrence Lepard begins by pointing out the serious problems with the current monetary system. He contends that the U.S. government's debt load has grown to such an extent that it is impossible to pay it back in the real world. He believes that because the system needs continuous credit expansion to survive, we are about to enter an era when debt will continue to expand tremendously. The inevitable result of this debt spiral is the devaluation of currency to meet service obligations. Lepard cautions that investors must comprehend the implications for their savings and purchasing power because this is a worldwide fiat crisis rather than merely a U.S. problem. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Really flipped. I mean, in March of 2020, the U.S. 10-year briefly traded for 50 basis points, and then it reversed, and it reversed hard. And in my view, what's happened is we've gone from a 40-year deflationary trend. We now live in an inflationary era. And the reason for that is that finally, more and more people have come to understand what you've always said: you can't taper a Ponzi, and that is in a system where money is debt, and debt must continually grow because you have to create debt to service the interest on the old debt. You have to grow the money supply. And so they were able to mask the inflation for 40 years, Max, as you and I both know, through a lot of beneficial things. I mean, they had shale oil, they had the China people working for pennies and other things that helped create a fake sense of deflation, but all the while they were still growing the money supply at 7 or 8% a year. And that the fact that the money supply has to continue to grow is finally being recognized by more and more people, and that's leading to more and more people recognizing that they have inflation and that we will have more inflation. So we know right now China is printing massively because they had a real estate collapse.
Right.
And we also know that they do printing that they don't call printing. I mean, let me give you an example.
Yeah.
They go to Japan and they probably say something like, you buy our bonds and then we'll give you a cheap swap line to give you the money to buy our bonds with.
Right.
I mean, there are all kinds of things that are going on behind the scenes that more or less represent monetary debasement, but we can't see them because they don't want us to see them. Another good one is the SLR, which is the supplementary leverage ratio, which limits how many bonds the banks can buy. Well, they've already hinted that they're going to eliminate that. So effectively, they're going to enable the banks to do QE, which is really what they did in World War I, where they said to the banks, hey, buy these Liberty bonds, and we're going to give you money cheaper than the Liberty bonds. You're going to make a positive carry.
Right.
They're going to do the same thing here. They're going to do what they always do, what they've done time and time again, and what more and more people are figuring out. And that's why sound money is absolutely crushing bonds. I mean, since 2020, Bitcoin is up 2,000%. Measured in sovereign bond terms. 2,000%. I mean, and that's because sovereign bonds are down 60% and Bitcoin's up, 10x. So it's just, this is a sovereign debt crisis. We can all see it. It's blatantly obvious. Will there be zigzags? Sure. And as you point out, there will be times when they do things that make us think we're wrong. And it's not going to be a one-way straight line to, Bitcoin at $2 million. But it's going to trend in that direction very, very heavily. And the great advantage that all Bitcoiners have, in my opinion, is that we understand something that's absolutely true. It's almost mathematically true. And we also understand the way the system is constructed. And there's no way for the system to stop what they're doing. And so, we know where it's going. Now, the thing we don't know, the thing that's tough, and it's been tough for me because I've been fighting this battle for 40 years, as have you, is we don't know the zigs and the zags, and we don't know how fast. But I sleep well at night knowing that my kids are going to be completely financially secure because the things I own are going to go up in value in an enormous amount. It's analog sound money, and it's the second best to Bitcoin. Bitcoin's going to crush it in terms of alpha. But as I always say, you can't print gold. You can't print Bitcoin. And so for my 80-year-old clients who don't want to have a 50% drawdown, some of them own gold, and that's okay.
Yeah.
And it's not going to go up as fast, but it's not going to lose value. 8 billion people know that it's got value. And Bitcoin will ultimately demonetize gold. That will happen, but not tomorrow. There will be plenty of time to make the transition from one to the other.
Just buy Bitcoin and shut the fuck up.
There we go.
That's the only thing you need to do. You don't need to get fancy with it. Just buy and hold. That's what I've been doing. And look at me. I'm Max Keiser. That's what happens. Am I right? I'm right.
There we go. We got the
Now,
legend.
where's everybody?
Max, where are we going now, man?
We're going higher.
How high? Tell me.
We're going much higher.
Much higher.
Because the panic is setting in.
According to Lepard, the collapse has already begun. He compares it as a train wreck in slow motion that is now moving more quickly. He cautions that the rest of the world economy will soon follow when even the most stable financial systems in the world start to collapse. However, Lepard closes on a positive note despite this gloomy outlook. For those who are interested, he thinks that Bitcoin is the Titanic's lifeboat. It is completely decentralized, mathematically constrained, and immune to intervention by the government or central bank. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
Exactly when. The strains are all there, though. The Japanese bond market falling apart. That's certainly a big
Yeah, I
night.
think this is the straw in the wind. This for 20 years, Lawrence, we've been talking about the yen, the Japanese bond market, and how it fits into the global Ponzi scheme.
Right.
And it's very slow motion train wreck. I'm not sure people fully understand the interrelationship between the Japanese bond market, the yen, or what's called the yen carry trade,
Yep.
and the big print. Can you connect the dots for us?
I'll try. I mean, the bottom line is that we all know is that fiat is a Ponzi. And of course, as you pointed out years ago, Max, you can't taper a Ponzi scheme. And the biggest source of cheap fiat for many, many years was Japan, where they had 0% interest rates. And so people would borrow in yen terms, and they'd use that money to get yielding assets, and it was a carry trade. And that all worked great as long as the yen interest rates were low. But what we're now seeing, and it's a really notable move, I mean, it's almost gone parabolic, is that the long bonds in Japan, the 30 and the 40 year, are really starting to hockey stick up. And from almost sub 100 basis points, they're now in the approaching 400 basis point range. And so to me, what that indicates is that people are losing confidence in the underlying strength of the Japanese currency, and they know that just like America, Japan is going to have to print. They're going to have to print massively.
Right. I mean, just to get into the technical a little bit. So when you say that people are short the Japanese yen or selling the Japanese yen, just so people understand the mechanics of that. So in other words, if I want to raise a bunch of money and I want to take that money and I want to invest it somewhere, I can go to Japan and I can sell short yen. I can sell yen in the open market short. And
Right.
the reason why I would do that is because the interest cost on my short sale is unbelievably low, like
Right.
almost less than 1/10 of 1%.
Right.
So therefore Japan becomes the least expensive place to borrow money.
Correct.
So you're borrowing money in the form of selling yen in the open market in a margin account as a short seller, right?
Right.
And you take the cash, and if you put it into the U.S. Treasury market yielding 3 or 4 or 5%, you're making a positive
Carry.
cost of carry. Okay,
Right.
that's where they come up with the term carry trade. Okay.
Correct.
So now, if you look at the global market of all these fiat currencies, every country has a different interest rate. And so at the bottom, though, for decades, has been the Japanese yen.
Correct.
So the
That's
Japanese yen becomes the base layer of the global Ponzi scheme.
Correct.
And so what we're seeing now is an unwinding
Yes.
of this global Ponzi scheme. So interest rates, or the cost of borrowing, are going up. Tell us what instigated this reversal in Japan.
Well, I think a couple of things. First of all, Japanese inflation has been going up, and the yen has been weakening, I believe, over time. We put some more tariffs on, the stock market will fall, and we'll catch a bid in the bond market. Briefly they do, but then the bonds just keep marching higher.
Right. And he says stuff like, well, we're going to stimulate the economy by, not raising rates or maybe lowering rates. It's the supply side economics theory has
Well,
never
and
worked.
what's very interesting is, of course, the Trump administration started off with Doge, which was a noble effort, but eventually they had to pivot, and as Lynn pointed out, they've now gone to, okay, well, let's not worry about Doge. We're going to outgrow it.
Right.
Well, the only way to outgrow it is to have GDP go up faster than debt. And the only way GDP can go up faster than debt is either we get an enormous productivity increase, i.e. we get fusion tomorrow, which isn't going to happen, we get total AI tomorrow, which isn't going to happen, or we inflate the underlying currency so that the GDP number gets bigger, even though the number of goods and services provided does not get bigger.
But there's another paradox here, because if you try to grow the economy, you have to do CapEx. You have to borrow.
Right.
And your interest, your borrowing costs are going up.
Getting higher, yeah.
And the interest on the borrowing is going up.
Yeah.
So you don't have room
to
borrow,
You're crowded
even
out.
to grow
yes.
the economy on that side either.
Yeah, that's another great point. That's another great point. Yeah.
Right?
I mean, you know, again, what the book points out, and once again, thank you so much for writing the brilliant foreword to the book. What the book points out is that they are trapped, and all roads lead to monetary debasement. They just do.
Right. So let's talk about the timing of all of this, because you know the bond market having a fall has been the widowmaker for 20, 25 years.
I know.
According to Lawrence Lepard, the entire system of fiat money is similar to a Ponzi scheme. As previously stated by Max Keiser, a Ponzi scheme cannot be tapering. It cannot be gradually dismantled without collapsing. Because their interest rates were essentially nil, Japan was the largest source of inexpensive money for many years. Because it was practically free to borrow in yen, investors would do so and then use the funds to purchase higher-yielding assets in other places. As long as Japanese rates were low, this so-called carry trade was successful. However, as Lepard notes, things have altered since then. The yields on Japanese long-term bonds, such as their 30 and 40-year bonds, are increasing quickly, going from under 1% to about 3 to 4%. This indicates that people are becoming less confident in the Japanese yen and are aware that, like the US, Japan will eventually need to print large quantities of money to pay off its debt. He explains how the carry trade performed. Because borrowing was so cheap, investors would sell yen short. They would invest that money in US treasuries or other assets that pay 3 to 5%, profiting from the difference. Japan served as the cornerstone of the entire fiat system and the global borrowing system for many years. Lepard concludes by cautioning that although the bond market has so far weathered every crisis by using extend and pretend strategies, the events in Japan suggest that this cycle may be coming to a close. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.